More than just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live bright and early this Monday morning. Thanks so much for tuning in. I'm Alex Matthew. Let's first look at the headlines. Asian equities have begun the week's trade lower as investors assess the impact of higher American tariffs on the global economy. US President Donald Trump has said that America will impose a 25% import duty on steel and a 10% duty on aluminium. The move, however, has drawn a muted response from both China and India. The US drug regulator has raised concerns over Aurobindo Pharma's sterile capabilities at Hyderabad, issuing 9 observations for one of its plants there. And the BJP makes further inroads into India's northeast with a historic win at Tripura and a comfortable mandate in the state of Nagaland. Let's turn to the international markets, and US stocks were particularly volatile in Friday's Wall Street session, and despite trading off their lows, the major averages posted a weekly loss for the first time in 3 weeks. Bloomberg's Abigail Doolittle has this report.
Volatility ruled the day and the week. Friday's Wall Street session was another day of big swings for stocks that ultimately led to a mixed close. The Dow finished down about 0.3%, while the S&P 500 and the Nasdaq recovered from greater than 1% declines at session lows to finish higher, the Nasdaq by more than 1%. Now, 2 sources of ongoing uncertainty for investors and thus volatility include the prospects of rising rates under Fed Chair Jay Powell and the prospect of a potential trade war. The latter, of course, after President Trump proposed tariffs of 10% and 25% respectively on aluminum and steel on Thursday, something that hit many of the industrial names into Friday due to the possibility of rising input costs. Caterpillar was down nearly 10% on the week. Boeing fell more than 3%, while Deere & Company was down about 8% on the week. In fact, it was a down week for all 11 of the S&P 500 sectors and for the major averages themselves, the first down week in 3, so a lot of bearish activity there. But one bright spot is found with the chips, the stocks. The Philadelphia Semiconductor Index finished higher on M&A and deal speculation. But with the Haven yen higher on the week, along with the VIX, that quote-unquote fear index, with stocks lower, the week did certainly carry a risk-off and volatile tone. In New York, Abigail Doolittle, Bloomberg News.
Let's turn to Asian markets, and those equity markets in Asia are trading a little mixed. The early risers opened lower, but then in China, we seem to have opened in the green. The Nikkei in Japan is about 0.8% lower at the moment. Let's go live to Rosalind Shin, who joins us from the Hong Kong studio with all the updates from those markets. Morning, Rosalind.
Good morning. Really a very, very busy start to the week here in Asia. We've got so many things which are moving around. We've got those trade tariffs from the US coming in. We've also got a political situation in both Italy and Germany, which has been moving the euro, and also China's MPC, which kicked off today. Premier Li Keqiang has been addressing all the lawmakers in China. And of course, there are also a lot of data coming out in the course of this week as well that investors will be looking at. So let's just start with China first, because of course that is ongoing right now. And China, of course, has been unveiling its economic plan for the year, as well as how it thinks it will, well, what its targets are really in terms of the economy, and also for its social stability as well, social rules as well, and all the areas surrounding that. It said its growth at around 6.5%, which is largely expected, a bit of a slowdown from last year. And it says it's going to cut import tariffs on autos and some consumer goods. The National Development and Reform Commission saying these things before Premier Li Keqiang started his speech earlier today. Now, the economic targets, of course, included a lower budget deficit, which may signal less chance of further stimulus. This, of course, may not be a direct impact, though, on the stock markets in China. We've also got the question of, is China prioritizing growth or reform? We're going to see what else comes out of this MPC to really be able to assess that situation right now. But the key point, of course, will be the consolidation of power by Xi Jinping. His term limits, of course, having been removed, or at least that is what is being discussed at the NPC. Now, we are seeing a lot of the markets here in Asia trading lower. In fact, we've got the Asia Pacific Index trading down by about 1/5%. The Nikkei and the Tropics trading lower by more than 0.5%. The yen has been edging higher. It's not really moving that much right now, but that's as investors were seeking havens or have been seeking havens after the news of those tariffs of 25% on steel and on steel and aluminium imports going into the US are coming out of Washington over the last few days, and so the yen has been seeing some movement there. A euro strengthening after the Social Democrats in Germany backed a coalition with Angela Merkel, and of course Italy's election, where we see that a hung parliament may be what's coming up, because of the five-star movement is actually coming out front. So a lot of things here a lot of moving parts here. In South Korea, the Kospi is losing about 0.25%, and ministers there are to hold a meeting on those US import tariffs. Hong Kong, Shanghai just coming online a few moments ago. Hong Kong just about flat, Shanghai up by about 1/3%. And Australia set to, in fact, extend its longest losing streak in about 6 weeks or so, currently down 0.3% right now.
Thanks so much.
Lots to look out for. Back to you.
Thanks so much for that, Rosalind. And of course, lots to look forward to over the course of the week with regard to the economy and monetary policy. The ECB meets, so does the Bank of Japan, and also we're going to end the week with the US payrolls. But let's head across to the Indian market and the trade setup for India. Darshan Mehta is standing by to give you all the details there. Darshan, how's it looking? Of course, lots to catch up for. Friday was a holiday.
Yeah, it was, and Friday was brutal as far as the global markets were concerned. Now first, let's take a look at what happened with the S6 Nifty. Now you're seeing an uptick of almost 55 points, but remember, we were down 133 points on Friday. We were shut, so that will be factored in. So expect anywhere between a 70 to 80 point gap down opening on today's trade. So you can't take this only into consideration. You also have to look at the 130 point downtick that we saw on Friday also. Now, what happened with the ADR? So Infosys, HDFC Bank, ICICI and Wipro, all of them managed to gain in trade on Friday. Apart from it, if you're looking at the other ADRs that panned out in trade, Dr. Reddy's was flat. Tata Motors and Vedanta seem to be showing a little bit of pressure in trade. Now, the other factor is how did crude pan out in trade? So for the past 2 days, crude has been on an uptick. It's been doing well. Today also on opening, it's up almost over 0.5%. Brent is closing in on the $65 barrel per mark, and WTI is closing in on the $62 barrel per mark. So after 3 or 4 days of heavy consolidation and heavy selling, we're seeing some bit of traction that's coming back into crude. How did the base metals pan out in trade on the LME? There was clear indication of weakness that was there, because you could see that zinc was down 1.5%, copper was down almost 0.3%, and tin was down 0.8%. The only two metals that gained was aluminium as well as lead, but they were up only marginally. Now, how have things opened in China? Most of the base metals have opened with a negative bias, close to 0.5%. So zinc is down 0.5%, aluminium is down 0.5%, and steel is down 0.5%. The only commodity that is probably managing to hold on in China is rubber at this point of time. Now, gold and silver, all the precious metals are trading with a slight positive bias in trade today. The other factors are how did the fund flow pan out in trade. Again, it's a new month. FIs bought in almost 240 crores. DIs were marginal sellers. So FIs seem to be starting off the month with a decent buying number. Not very high, but yes, that's fine. Mid caps and small caps, again, the mid caps saw a significant amount of selling. It was down 0.8%. Small caps were flat in trade. The other sectors that will be in focus, again, sell-off in the Nifty PSU Bank Index, it was down 2%. The Nifty Media was down almost 1.5% in trade. How did the Nifty pan out in trade? Nifty was down 35 points. Some of the banks managed to hold on, especially the private sector banks. So IndusInd Bank and Kotak Mahindra Bank, among the financials, HDFC contributed. But Infosys, SBI, Reliance and ICICI were the main reasons why there was significant amount of pressure. ICICI almost, one-third of the losses came in only because of ICICI Bank.
But you also have the F&O cues for us, and how the, what are the levels that we have to watch out for?
Yeah, so for the F&Os, first let's take a look at what happened as far as the SGX Nifty is concerned. I already indicated to you that, don't look at this. We will have a 70-point gap down because the SGX Nifty is up almost 61 points. So we will have a gap up opening. The bears will be in control today. Now, how did the Nifty pan out in trade? The Nifty is trading at a discount and fresh short positions were taken. Open interest was up almost 6% on the Nifty, and the Nifty was down almost 0.3%. How did the Bank Nifty pan out in trade? The Bank Nifty is pretty much trading at a premium, but again, there was long unwinding seen on the Nifty Bank. Open interest was down 2% and the index was down close to 1%, below the 25,000 mark in trade. Now, the other factors is the open interest. What happened as far as the distribution is concerned? You can see pretty much call writers are much more aggressive from levels of 10,500 right up to higher levels. 10,400 is extremely important. If this gets taken out, there will be heavy selling that's coming in on the market. This is acting as a bit of support for the market. So at this point of time, call writers are much more active. Now, if you're looking at what happened on Thursday's trade in terms of change in open interest, you can clearly see that call writers were much more active. They're active at higher levels. They will be writing at these levels because they don't see the Nifty coming to levels of 10,800 in this series. Even at 10,400 and 500, they're writing in, and you can look at the red marks. Hardly any red marks, and whichever it is on the downside, indicating that put writers are closing in their position. So this gives a firm indication that the market currently is with the bears at this point of time. Very, very less chance of recovery for the market as per the current trend. Now, which are the stocks in the F&O ban? HDIL comes in the F&O ban. It was down almost 4% in trade. So this is something that you need to watch out for. While JP Associate comes out of the F&O ban. Not too much. It's a liquid stock, but it comes out of the F&O ban. The other stocks in focus, especially, and before I move to IDBI Bank, I want to speak about Fortis, because Fortis will be out of the F&O series, F&O out of the March series, given the fact that the auditors did not sign. So this is the last month for Fortis in the F&O series. IDBI Bank, high open interest build up of 30% on the long side. Counter was up 8%. So that is in focus. The other stocks that you need to watch out will be, counters like Canara Bank moved lower on high open interest build up of 3%. The other stocks that you need to watch out is Dalmia Bharat. No data, but certainly fresh buying was seen on the counter. Again, you're seeing sales of fresh short positions. Open interest up almost 8% on the counter. BPCL saw almost short covering. Open interest was down 11%, was one of the big gainers on the Nifty. And Aurobindo Pharma saw short covering. Probably today might see fresh shorts given the fact that the observations are out. And the ADAG group saw selling on Thursday. Open interest build up of 6% on Reliance Infra, and Reliance Capital was the other one that saw fresh short position. This one saw long unwinding that came into the market. So it's a day, Alex, that will probably belong to the bears again.
All right. Thanks so much for that, Darshan. Let's move on and take a quick check on the rupee and the bond market now. And Saloni Dhanuka is here to do just that. Saloni, morning.
Good morning, Alex. So, despite strong macroeconomic data last week, the rupee ended steady at 65.17 levels against the dollar amid growing concerns of faster than expected Fed rate hikes this year. For the week, the home currency depreciated by a good 44 paise against the dollar. And remember, it has weakened by approximately 160 paise last month, or 2.5%, the most since August 2015. Well, moving on to debt market, sovereign bonds capped their 7-monthly decline, the longest losing stretch in at least 2 decades, as yield on the new 10-year benchmark security climbed up roughly 30 basis points last month to 7.74%. Well, on the global front, the Japanese yen climbed to near 2-year high as investors moved to safe haven currencies after US President Donald Trump escalated talk of a trade war by imposing tariffs on steel and aluminium. The Japanese currency was also supported by comments by Bank of Japan governor on easing monetary policy starting FY20 if they meet their inflation target of 2% in this financial year. Well, speaking of dollar index, it now trades lower for third consecutive session, well below the crucial 90 mark. And lastly, coming back home, dollar rupee is trading at 65.21 levels against the dollar in the non-deliverable forward market, which indicates a flat to negative opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Well, that was the update on the currency for you. Let's move now and shift focus to the commodities market. Jayesh Khilnani has all the updates there. Morning, Jayesh.
Morning, Alex. Let me start off with oil prices. Both Brent and WTI are currently trading with a 0.5% positive bias, but that is after falling about 3.5% for last week. Now, this is on account of the biggest Libyan oil field that is set to have stopped pumping, and hence we are seeing a revival in prices. On Friday, we saw the futures recover more than 1% from the day's low. Moving on to the base metal space, most of the base metals fell in London for 4 days in a row now. And as far as individual base metals are concerned, aluminium posted weekly gains for itself and was the top gainer in trade, with lead also rising marginally, and tin actually fell on London Metal Exchange. Now, the top loser was zinc, which actually fell 1.5%, and we had copper and nickel, which also ended marginally lower. Now, the similar action can be seen on the Shanghai Futures Exchange, where most of these base metals have started trading lower. As far as gold prices are concerned, we're seeing some bit of uptick come about for gold, and it's currently trading higher for the second consecutive day on account of the dollar index, which actually ended lower for 3 consecutive days.
Thanks so much for that, Jayesh. Well, the ruling BJP party made a further inroads into the northeastern part of the country after completing a historic sweep in Tripura, a state where 49 out of their 50 candidates lost their security deposits in 2013. The party ended a 25-year communist rule by bagging 43 seats in the 60-member assembly, thwarting Chief Minister Manik Sarkar's attempt at a record 5th term in office. State Party Chief Biplab Deb is said to be the front-runner for the chief ministerial post. The BJP also emerged as the second largest party in the neighbouring state of Nagaland, bagging 27 out of the 60 seats, putting it in a comfortable position to form the government with its alliance partner NDPP. However, Chief Minister and NPF leader T.R. Zeeling has refused to resign, saying he will meet BJP President Amit Shah to discuss formation of the government. The BJP and NPF could not sign an alliance earlier due to disagreements over seat sharing. Nagaland Governor P.B. Acharya has asked NDPP leader Nephew Rio to submit signatures of the 32 MLAs he claims to have the support of. Lastly, Meghalaya threw up a fractured mandate, with the Congress emerging as the single largest party with 21 seats. However, the NPP president Conrad Sangma met Governor Ganga Prasad and staked claim to form the government with the support of 34 MLAs in the 60-member assembly. While the Congress failed to open its account in Nagaland and Tripura, the BJP managed only 2 seats in Meghalaya. Well, let's turn to another update that we had over the weekend, this time from the pharma space. The US drug regulator has raised concerns over Aurobindo Pharma's sterile capabilities at Hyderabad. The FDA has issued 9 observations to the facility after the inspection last month. Darshan Mehta has assessed the Form 483 and he's standing by with what the regulator had to say. Darshan, in the story that you put on the website, you said that it could be quite problematic for the company.
Yeah, so basically what we said in the report is that, there are no data integrity issue, but Aurobindo will have to respond, and if the US FDA is not convinced, there could be trouble. And I'll tell you why that has happened. But firstly, 9 observations were made at the Hyderabad plant. Now remember, this is a sterile manufacturing unit, and despite them being not very serious in nature, 9 is still a big number for Aurobindo Pharma. The inspection was from 12th to 20th, and so the FDA has put out the Form Form 483, which we have access to. Now, the other parts that you need to look out as far as this issue is concerned, which are the 9 observations that were there. Firstly, most of them, there are no data integrity. First of all, there is deficient system in maintaining equipment. So there are a lot of these equipment related issues. Again, the second observation says equipment and utensils not cleaned, maintained and sanitized, again relating to equipment. Thirdly, equipment used is not of appropriate design. So basically a lot of things have been actually with terms of equipment. Now this is important. The building is not free of infestation. They found a mosquito inside the sterile manufacturing unit, which is not acceptable according to the US FDA because it's a sterile manufacturing unit. Procedures for cleaning and maintaining of equipment deficient. Again, there are issues as far as the cleaning. So if you see, majority of the issues are procedural in nature. Employees lack training is the 6th observation. The 7th observation that they talk about is basically in terms of, again, computer system, control system. So that's the basic things. They're talking about quality control for criteria, actually failing to meet appropriate levels of acceptance or rejection in any kind of batch that is there. The 8th is in terms of lab controls, documentation. So that is something that there. And finally, the 9th one is a little important in terms of computer access. So they're saying that there was no appropriate controls over computers were not maintained. So this is something important, and they need to respond to the US FDA why this was not done. Now, what does this all mean for and what does the observation show? There are no data integrity issues. Financials won't be affected given the fact that the plant is running. The future approvals will still come in because it's not escalated into a warning letter. But procedural are in the observations are procedural. If it was a normal plant, it would be fine. But this is a sterile injectable plant, so that could mean trouble for Aurobindo going ahead. Strong criticism of a sterile manufacturing and despite of the plant being inspected earlier also, and response to the 9th observation is very critical. Now Aurobindo will have to respond to the US FDA in the next 15 to 16 days for them to get a clearance. There's a high chance that they may get cleared, but there is also a chance of warning letter to come in because if the response is not according to what the US FDA wants. And the reason we are saying is for similar observations, Bayer AG's Germany unit got a warning letter for for a sterile equipment cleaning and similar observation, especially one with terms of equipment for a sterile manufacturing unit. So it could be even Stevens, not very serious, but it all depends on how Aurobindo responds to the US FDA.
All right, thanks so much for that, Darshan. That's the update for you for Aurobindo Pharma. But let's move on to the big story from Friday. Donald Trump has gone ahead and said that America will impose a 25% import duty on steel and a 10% import duty on aluminium. His decision, while riling up the European Union and corporates within the US, has not really evoked a very strong response from the world's largest steel maker, that's China, or even from India. The reason is apparently simple. Only a very small quantity of the steel produced in these two countries make it to the US, that's America. That said, it doesn't mean that Indian and Chinese steel makers don't get affected by this. Nikki Merchandani, who's been scanning through all the brokerage reports that came in after the event, is here with all the impact that we have to talk about. Morning, Nikki.
Hi, Alex. So US President has imposed across the board tariff for steel as well as, imports of steel as well as aluminium. It has proposed a good 25% tariff on steel imports and a 10% tariff on aluminium. It's expected that Trump is expected to sign a formal agreement anytime soon in this week as a protectionist measure that you'd see coming out from US. To understand what kind of impact this would have, we have HSBC Global Research. It's put out a note where it's given the percentage share of steel exports to US, where you'd see maximum share coming in from Canada, Brazil and Korea, which stand at a number of 17, 14 and 10%. And you would barely see any kind of share coming in that from India and China, which currently stand at 2% each. So direct impact, according to HSBC Global Research, it says that though the direct impact of this development seems to be minimal, because India accounts only for 2% of your overall steel imports to US. This measure is expected to be positive for US-based mill. However, it's expected to be negative for all the other exporting nations. Having said that, exports will now find a way to other markets, and this additional capacity will have to be rerouted, which means that we would now see some kind of pricing pressure even in domestic market. And HSBC has put out actually a sensitivity analysis where it suggested that a 1% drop in the domestic steel prices could lead to a contraction of good 5 to 10% for the top steel players. If you look at a 1% drop, Tata Steel is expected to drop. EBITDA, FY19 EBITDA is estimated to drop as much as 5%. Same is the story with JSW Steel. For SAIL, relatively that portion is higher on account of the lower base, and for JSPL it's at 2.3%. Morgan Stanley on implications suggests that this move is expected to have some impact on the downstream company of Hindalco Novelis, because Novelis procures some of its aluminium requirements locally, and this could this could lead to an input pressure for the company. However, the brokerage note has said that the strong growth in domestic steel demand could observe the incremental domestic supply. So net they are not assessing any kind of incremental direct impact, but then the rerouting of exports could have some bearing on your steel prices, which in turn could impact the profitability of steel players and Novelis and Hindalco going forward.
Thanks so much for that, Nikki. Let's turn to the stocks and news now, and those of course are the stocks that are likely to be buzzing in trade based on the fact that they've been in the news. Well, Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. I'll start off with some of the monthly auto sales numbers that were reported over the weekend. Hero MotoCorp, the February month sales went up by 20% to 6.29 lakh units. TVS Motors fared much better with a 37% growth in sales for February at 2.9 lakh units. That apart, you have Thomas Cook, whose board had approved exploratory and feasibility study for restructuring of group companies, in which Quest Corp might be impacted as well. So Thomas Cook and Quest Corp to look out for. NMDC has cut prices of lump ore and fines by 3 to 3.5%. So watch out for that stock. Wipro will acquire 33% stake in a US-based application security solution provider, which is Denim Group, for $8.8 million. That's close to 58 crores, so very small acquisition for them. Lotus Lab, where US FDA has completed the inspection of its Unit 2 with 0 observations, and additionally they've also said that they have received their first US FDA approval, and that is for a drug used in the treatment of HIV infection. Healthcare Global Enterprises, they have entered into an agreement with the promoter to buy a cancer care hospital for 52 crores. Dilip Bilkon is yet another one that we are tracking. They've received a letter of award from the NHAI for 2 new hybrid annuity projects in Karnataka, which are worth 4,500 crores. So that momentum as far as order wins are concerned continues for Dilip Bilkon. And lastly, KPIT Tech might be in focus as well. This is on the back of a Mint report which says that KKR's arm has given about 425 crores in structured credit to promoters of KPIT Tech for them to be able to finance an open offer for the company. So those are some of the stocks to watch.
Right. Thanks so much for that, Shraddha. Now, quite an exhaustive list there. If you missed any one of those, you can find them on the website on a story called Stocks to Watch. So all you have to do is look for Stocks to Watch on the website. Over to the big brokerage calls of the day now, and Saman Sarkar is here to tell you all about those.
Good morning, Alex. On the big brokerage call for the day, first we have is Edelweiss on Fortis Healthcare. Now, the brokerage has maintained its buy rating on the stock but has cut the target price to 180 from 230. Now, according to the brokerage, controversies and a challenging environment has led to a muted earnings growth for Fortis, but the quality of business still remains intact, says Edelweiss. Now, going forward, Fortis can unlock a significant value by demerging SRL, according to the brokerage. SRL, which is the diagnostic business of the company, is valued at close to 30% of the total consolidated enterprise value of the Fortis. That adds around 50 rupees to the target price of 180 according to the brokerage. Now, the brokerage is expecting the company's revenue and EBITDA to grow at a compounded annual growth rate of 16% and 23% over FY18 to FY20. And lastly, it says that free cash flow generation from financial year 2019 would lead to re-rating when it comes to Fortis.
All right. Thanks so much for that, Somit. Now, Lots of news and updates over the course of the day that are coming your way right here on Bloomberg Quint Live, and you'll also find all the live market action right here. But there are also several stories that you should consider reading on the website bloombergquint.com. Here are just a couple of them. A special court on Saturday issued non-bailable warrants against billionaire jeweler Nirav Modi and Mehul Choksi of Gitanjali Gems in the 12,700 crore Punjab National Bank fraud case. The two are believed to have left the country before the cases were registered. Proxy advisory firm IIAS has questioned the fact that ONGC has sought exemption from taking shareholders' approval to acquire the government stake in HPCL. Well, that's all we have for you in this edition of Daybreak, but all you need to know is up next, so do stay tuned. Thanks for watching. This is Bloomberg Quint.